All right, what the tycoons, this is ES, which is the S&P 500 futures. You can trade SPX or SPY with this. Now, we were thinking this was going to be an irregular flat or expanded flat, which is like this. Yep, as you can see, the expanded flat, we have the A wave, and then we have the B wave that goes above the beginning of the A wave, and then the C wave comes down past the A wave in a 5-wave structure. Now, we were thinking that it was going to be an impulse. As you can see, it can be an impulse or an ending diagonal. Now, in a regular impulse wave, wave 4 cannot go above 50% of wave 3. So that was the 38.2, which is like the regular impulse wave retracement, and 50% would have been right about here. So we got above that. That lets me know we are in an ending diagonal. So we're going to delete this, and then the ending diagonal can retrace up to 78.6 of wave 3, and it also can retrace into wave 1, which it did, which lets me know that is an ending diagonal. All right. And honestly, I don't always do Elliott wave. It's just from what I see. I utilize what I see. So we have not only the 50 SMA on the 4-hour that we have resistance at, but we also have resistance at the 78.6, which is 5631. All right. Above 5631, we're, technically bullish, and then we get above 5650, it would even be even more bullishness. All right. But until then, we are still in this Elliott wave structure. And what would have to happen is we have one more wave that comes down, and where that's going to end, usually, as we said before, the expanded flat can end at the 127.2%, or the 138.2%, or the 161.8%. Now, we could think that it ended at the 127.2, but if we look at it like an expanded flat with an ending diagonal, this just means that we're going to come down one more time. All right. So in my opinion, we're going to hit in between this box right here, which is between the 123.6 and 161.8% retracement. So I think we hit between 55.44 and 55.17. All right. So that is my analysis. I think we hit between 55.44 and 55.17. Ideally somewhere in between there, and then we bounce. Now, this also, if we didn't look at any of this, this also goes along with what I was mentioning when I said we have done this before in July. So you see in July, we're actually patterning it. We're mirroring it really, really, really closely. All right. So you see we have on the stochastics, we have boom, boom, boom. And then this comes up, and then it comes down one more time to create that bullish divergence for us to take off, right? So now we have the exact same thing over here, which is boom, boom, boom. It's coming up so that it can come down one more time to possibly create that bullish divergence for us to, take off. But I think the move for today would be down if, once again, we don't get above 56.20, 56.31 or 56.50. Don't know because GDP hasn't come out yet, but that is what we are looking for. Okay, so in my opinion, we got one more move down, and then we pop. So once we get down here, that will be the end of wave 4, which would be, that expanded flat. And then we are pushing for a wave 5 up. So wave 5 would have, 5 waves in it. So we would have a push up, a pullback, and then another push up, which would probably take us above all-time highs. Another pullback for wave 4, and another push up that would end this structure right here. And then we would possibly have a major pullback. So that's what we're looking for, and that's what we're tracking. But GDP hasn't come out yet, so we'll see what happens.